Ryan Shorthouse, director of Bright Blue, a liberal conservative think tank, as I mentioned. So this cap on student loan interest rate in England and Wales is going to be 6.3% come the autumn. It was going to be 7.3%. Is this going to mean an actual saving for students?
No, it's a really bad policy. It sounds good, but it isn't good. And I'll tell you why. Because at the moment, if you graduated after 2012 and you're on that student loan system repaying those loans, about 80% of people on those loans don't pay their loan off in full. So the interest rate could be 1,000%. And what is sort of added to the total loan wouldn't make, because of the interest, it wouldn't make a difference. You wouldn't pay a penny more if the interest rate was 1,000%. So the only people who benefit from reducing the interest rate is the very wealthiest graduates, the 20% or so who do pay off their loan in full. They're normally people in their 40s and 50s. They will be in their 40s and 50s, much more affluent. So they're the people who will benefit in several decades' time. This does not reduce the monthly repayment to a graduate now. And in the middle of a cost of living crisis, the government should be helping young graduates on very low incomes now. This policy to cut the interest rate does not do that.
And am I also right in saying that they're extending the term over which you pay as well?
So that is a separate announcement from today. But from next year, next September, new students will be getting a new student loan system, which means that they'll be paying, instead of 30 years, their full student loan for both maintenance and tuition, they'll be paying over 40 years. That means many more people will pay their loans off in full, and that tends to be people on more middle incomes. Indeed, I would say the policy that's been announced for next September, from next September, is much worse than the current system, because the repayment period is longer, from 30 to 40 years, but also the repayment threshold when you start repaying it is lower. And as a result of that, people on low and middle incomes, graduates, will be paying more per month and for longer. So it's a worse system the government's put in place, unfortunately.
So over the years, from back when going to university used to be £3,000 a year, and then it became £9,000 a year, and then now how you repay that has got a bit more expensive. Is it fair to say that over the past 20 years or so, it's got more and more expensive each year to be a university student?
It has, on the face of it. But what I would say, for example, is that those graduates who came out of university after 2012, they may have been paying £9,000 a year plus their maintenance. But because of the way the repayment system worked, a lot of them didn't pay off that amount of money in full, or wouldn't have done over the 30-year period. So the IFS, for example, says that the bottom 20% of graduates in the post-2012 system would have only been paying, on average, about just over £3,000 over a lifetime for going to university. So there's the headline tuition fee and the amount that you loan, but then the actual amount that you repay, and the way that the system works, the repayment system works, means that it's very progressive. And as I said, if you're on the very lowest incomes as a graduate, you hardly pay that much at all for going to university. So, we have to see the student loan system as not like a mortgage-style debt or a typical loan that you get from the bank, where you have to pay it regardless of your circumstances. This is an income-contingent system where you pay a fixed amount of your salary per month. And if you're not earning, for whatever reason, low earnings, or you fall out of work, you don't pay. You're protected in that way.
Ryan, we'll have to leave it there, I'm afraid. But thank you for your time there, and thank you for persisting with the technical issues earlier on. Ryan Shorthouse, director of the Bright Blue think tank.